Yes, now we will see the taxation of gifts, which is one of the most important provision under the head other sources, guys. Gift taxation, even in the past, when I was covering few provisions, I would have told few things about it, but now we will see in detail. Gift taxation is covered under section 56 to 10. Guys, whenever I receive a gift for a receiver, that is for me, I am called as receiver or recipient. For me, it is taxable under the head other sources. It is taxable under the head other sources. And gift can be in three forms. It can be money, it can be immobile property, it can be movable property. I repeat, it can be money, immovable, movable. Money means that is in the form of currency notes or coins, or it can be in immobile property. Immobile property means what? Land or building. And when it comes to movable property, all movable property is not taxable, only some specific movable property. So what is that also list they have given? We will see. So whenever I am receiving the gift, I need to check whether section 56 to 10 is applicable for me or not. Because there are few exceptions also. For example, if gift is received on the occasion of marriage or if it is received from relative and all, exemption is there. But let us learn the exemption later. First, let us see, sir, when is gift taxable? So as I told you, gift can be received in the form of three things. We will see if it is received as money, what? If it is received as immobile property, what? If it is received as movable property, what? Yes, one by one. Gift taxation. First, if it is now, if gift is received in the form of money, then, sir, how is it taxable? First part. Guys, if the aggregate money of gift received is less than or equal to 50,000, then nothing is taxable. Then nothing is taxable. I repeat, if the amount of money which is received as a gift in total in a year is less than 50,000 or equal to 50,000, nothing is taxable. Sir, what if it is 50,000, more than 50,000? Then entire amount is taxable. Entire amount is taxable. What is the taxable amount means? The aggregate value of money. AVOM stands for aggregate value of money, guys. For example, assume you gifted me 20,000 rupees in cash. That is in the form of money. Sir, is it taxable? No, not taxable. Another person gifted me 50,000 exactly. Only one person. Sir, is it taxable? No, sir. But now assume 10 people gifted me 10,000 each. Is it taxable? Yes. Aggregate value is how much? More than 50,000. Aggregate value is totally 1 lakh. 10,000 into 10 people. How much, sir? 1 lakh. So entire 1 lakh is taxable in my hands. Entire 1 lakh will be taxable in my hands. So if the value of money received is more than 50,000, entire money will be taxable, guys. Whatever we have received. Hope you guys got it. And please be careful, 50,000 is not like per person, it is per associate. Now, 5 people gifted me 25,000 each. Is it taxable? Yes. Sir, only one person gifted 25,000, sir. Each person 25,000 they are gifted. Assume 5 people gifted me 25,000 each. So, 1,25,000, more than 50,000, taxable. Sir, what if only 2 people gifted me 25,000 each? What is the aggregate value? 50,000. Nothing is taxable. Nothing is taxable. So in simple, we need to check from receiver point of view. If I have received the gift in the form of money from number of people, all aggregate put together, how much is it? If it is less than or equal to 50,000, not taxable. More than 50,000, fully taxable. Then coming to movable property. Only specified movable property is covered here, guys. Okay, that is why I mentioned here specified, because not all movable property are covered. What is specified movable property? We will see it. Okay, later. First, let us finish this. Now, assume I have received movable property without any consideration. Without any consideration means I didn't give anything in return. No consideration in return. In that case, check what is the fair market value of that movable property. If the fair market value of that movable property is less than or equal to 50,000, nothing is taxable. Nothing is taxable. Sir, what if it is more than 50,000? Then the taxable amount would be fair market value. For example, assume you gifted me the shares. You were owning the shares you have gifted me. Is it a movable asset? Yes. The fair market value of the shares is 40,000. Nothing is taxable. In my hands, nothing is taxable. Assume you gifted me the shares whose fair market value is 60,000. Entire 60,000 is taxable. Entire 60,000 is taxable, guys. Okay, hope you understood. Then coming to with consideration, but for inadequate consideration. Means I have purchased something, but for inadequate consideration. IC stands for inadequate consideration. Means I have paid, but I have paid less. For example, I purchased the shares from you for 20,000. But actually the fair market value of this shares is 50,000. How much is the inadequate consideration, guys? 30,000. Is it less than 50,000? Yes. They're telling nothing is taxable. Nothing is taxable. Sir, what if inadequate consideration is more than 50,000? For example, I purchased the shares from you for 20,000. What is the purchase price? 20,000. Whereas the fair market value of the shares is 80,000. So what is the inadequate consideration? 80 minus 20. How much is that? 60,000. 60,000. Is 60,000 more than 50,000? Yes. So how much is taxable? 60,000. Yeah. So simple. I have purchased movable property, but for inadequate consideration. So what is that inadequate consideration? I need to check it. How to calculate it, sir? Fair market value minus purchase consideration. Minus purchase consideration. What do we get? Inadequate consideration. Now, if that inadequate consideration is less than or equal to 50,000, nothing is taxable. If it is more than 50,000, then entire inadequate consideration would be taxable. I will give one more example. Please pay attention. Now assume, guys, I have purchased a jewelry for 1 lakh, whose fair market value is 2 lakh. So what is the inadequate consideration? 2 lakh minus 1 lakh. How much is that? 1 lakh. Is 1 lakh more than 50,000? Yes. How much is taxable? 1 lakh. That is, the inadequate consideration would be taxable. Same example, I will change the value. I have purchased the jewelry for 1 lakh, whose fair market value is 1 lakh 30,000. How much is inadequate consideration? 30,000. It is within 50,000. Nothing is taxable. Nothing is taxable. So these two scenarios covers different guys. That is, sir, here I am not at all paid anything. That means pure gift. I have received something as pure gift. Okay, whereas here I have paid something, but I have paid less than fair market value. We call it as inadequate consideration. Okay. This is for the money and movable property. Sir, what if it is an immovable property? For immovable property, we need to look into something called as stamp duty values. So in income tax law, whenever we are seeing movable property, even in capital gains, if you remember, if by chance if sale consideration is not available, what do we look into? Fair market value. Whereas for immovable property, we look into what? Stamp duty value. If it is a movable property, fair market value. If it is a immovable property like land building, what do we look into? Stamp duty value. Here also same way. So wherever FMV is there, no, in place of that, stamp duty value will come for immovable property. So for immovable property, first check, have you received it without any consideration? Without any consideration means pure gift. Nothing you paid in return. I got it free. So check stamp duty value of that property. If stamp duty value is less than or equal to 50,000, nothing is taxable. Nothing is taxable. Sir, what if stamp duty value is more than 50,000? Entire amount is taxable. Entire amount in the sense, entire stamp duty value will be taxable, guys. So let me put it in an example. Assume I received a land free of cost. Free of cost. Sir, who gifted it? Anyone. Let it be anyone. Obviously not relative, because if it is the relative, it will not come. It won't be taxable. Someone unknown person gifted me a land. Card gift. Okay. Chalo. Now stamp duty value assume is only 20,000. Land stamp duty value. Sir, where, sir? Just imagine stamp duty value is 20,000. Is anything taxable? No. Nothing is taxable. Nothing is taxable. Next. I received a building or land as a gift whose stamp duty value is 30 lakh. Stamp duty value, is it more than 50,000? Yes. How much is taxable in my hands? 30 lakh. 30 lakh, guys. Okay, come to the other side. This is important because this is different. Sir, I have purchased immobile property but for a consideration, but that consideration is a inadequate consideration. Means I have purchased for a lower value, guys. Okay. Sir, if I have purchased it for a lower value, then what should we do? First, find inadequate consideration. How do we find out inadequate consideration, guys? Sir, stamp duty value minus purchase price. Purchase price or purchase consideration, one and the same. Hope you understood. Find out the difference between what? Stamp duty value and purchase price. We call it as inadequate consideration. I have paid, but I have paid less. How much is that? Is called inadequate consideration. So if that inadequate consideration is less than or equal to higher of the two things, higher of the two things, what is it, sir? 50,000 standard amount or 10% of purchase price? Take whichever is higher. Whichever is higher. Check whether inadequate consideration is less than or equal to that. Yes, if that is the case, nothing is taxable. Nothing is taxable. Sir, what if inadequate consideration is more than higher of this two? Then inadequate consideration will be taxable. Inadequate consideration will be taxable. Simple logic, guys. You remember section 50C and 43 CA, which talks about sale value. While computing capital gains income and while computing business income, if land or building is sold, from seller point of view, we need to check 50C if land or building is a capital asset. If land or building is a stock, we need to check section 43 CA. 43 CA, where we will compare 110% of actual sale value with what? Stamp duty value. If stamp duty value is more than 110% of actual sale value, then only we will take what? Stamp duty value as sale value. If not, if the difference is within 10%, if the difference between actual sale value and stamp duty value is within 10%, then what do? We ignore it. Assume, sir, stamp duty value is less than 110% of actual sale value. Then what do we take it as full value of sale consideration? Actual sale value. Same way here, guys. I have purchased it, but only within 10% difference is there, sir. They're telling ignore it. Ignore it, we will not tax anything. But please be careful, 56 to 10, whatever we are learning now is not from seller point of view, it is from buyer point of view. Okay. I will try to explain this with an example, guys, because this is where normally students might get confused. Okay, listen here. Assume I have purchased a land or building. Okay, let me take it as land. I have purchased a land for 50 lakh, whose stamp duty value, I have taken two different scenarios. Whose stamp duty value, assume first scenario, 54 lakh. Is there an inadequate consideration? Yes, sir. Inadequate consideration is how much? 4 lakh. Correct, huh? 54 minus 50. How much is the inadequate consideration? 4 lakh. Now, keep it aside. We have found inadequate consideration 4 lakh, keep it aside. You need to find out two figures. A, 50,000, standard amount. B is actual purchase price into 10%. Actual purchase price into 10%. See, guys, this is sale value for the seller, whereas for the buyer, it is a purchase price. Okay, sir. Into 10% of that will come to 5 lakh. So 50,000 or 5 lakh, whichever is higher, 5 lakh. Now compare 4 lakh with 5 lakh. 4 lakh is less than 5 lakh. That means nothing is taxable. Nothing is taxable. In simple, I can tell like this. Sir, there is a difference between purchase price and stamp duty value, but that difference is within 10%. If it is within 10%, do we ignore it? Yes, we ignore it. Then coming to the other side, let us assume stamp duty value is 60 lakh. If stamp duty value is 60 lakh, what is the inadequate consideration? 60 minus 50, 10 lakh. 60 lakh minus actual purchase price, 50 lakh. So how much is the inadequate consideration? 10 lakh. Now compare that with higher of two things. 50,000 or 50 lakh into 10% comes to 5 lakh. Whichever is higher, 5 lakh. So is 10 lakh more than 5 lakh? Yes, sir. In that case, how much is taxable? Entire inadequate consideration, that is 10 lakh. Entire inadequate consideration, that is 10 lakh. Did you guys understand? So simple. This is applicable only when it is purchased for inadequate consideration. Sir, what if I have got it free of cost? Then the 10% and all will not come. Straight away check stamp duty value. If stamp duty value is within 50,000, nothing is taxable. If it is more than 50,000, then entire stamp duty value will be taxable. This is applicable only, guys. They have made this in line with what? Section 50C and 43 CA. Because there for the seller, we tell if the difference is within 10%, okay, we ignore it. Same way for the buyer also we are telling if the difference is within 10%, we will ignore. They have tried to bring uniformity there. They have tried to bring uniformity. Yes, sir. Hope you understood. I will just repeat this, guys. See, both cannot happen simultaneously. Anyone. Okay, I have just given from both the angles. Okay, so I have purchased the land for 50 lakh. Stamp duty value is 54 lakh. What is the inadequate consideration? 4 lakh. Keep it aside. We need to compare it with something. First, find out how much is that something. 50,000 or 10% of actual purchase price. See, by mistake, you might take 10% of stamp duty value. No, no, no. 10% of what? Actual purchase price, which is coming here to 5 lakh. So, whichever is higher, 5 lakh. Compare now 4 lakh with 5 lakh. Inadequate consideration is less than 5 lakh. So, nothing is taxable. Nothing is taxable. Coming to the other side, what if stamp duty value is 60 lakh? 60 minus 50, 10 lakh is inadequate consideration. Keep it aside. We need to compare it with something. 50,000 is the standard amount, fixed amount. 10% of actual purchase price is 5 lakh. Whichever is higher, 5. Compare 10 lakh with what? 5 lakh. So is inadequate consideration more than 5 lakh? Yes. So how much is taxable? Entire inadequate consideration. Okay, sir. Now this also I have connected to capital gains as well as the IFOS. That is especially if it is an immovable property, you have to be careful. From seller point of view, whenever land or building is sold, we need to check whether it is a capital asset or stock, guys. If it is a capital asset, which section should we operate? 50C. Under which head? Capital gains. Clear? There we need to check stamp duty value, all those things. Yes, that is to compute capital gains. What is the full value of sale consideration? We need to take care of stamp duty value. Then, sir, what for the seller if it is a stock? Then same provision is applicable, but under section 43 CA. Under which head? PGBP. So to compute business income, what is the sale value means? We need to compare actual sale value with stamp duty value and see which is higher, lower and all. But there also 10% gap is allowed. Now, from buyer point of view, for a buyer, if it is a capital asset, that is land or building which is purchased, if it is a capital asset, we need to operate with section 56 to 10 under the head IFOS. Sir, can simultaneously both be applicable? Yes, it can be applicable. For seller, from one side, this sections, whereas for buyer, this section. Clear? But listen, for this sections, there are few exceptions. Whereas for this, there is no exceptions and all. Whereas here, if it is received on the occasion of marriage, if it is received from relative and all, they told no 56 to 10. Whereas such exemptions are not there for these sections. Please be careful. Oh, sure. Now we will go and read the section. Then I will give time for you to take down those charts, guys. Okay, I just explained it through a chart. Now let us read the provisions. Ninth point. Any sum of money or the value of property received without consideration or for inadequate consideration to be subject to tax in the hands of recipient. Section 56 to 10. Guys, we are applying this section from whose point of view? Recipient. Where any person receives in any previous year from any person or persons on or after first day of April 2017. Means giver might be any person, receiver might be any person. Previously, few years back, this was applicable only if the individual is receiving the gift. But later they made any person, any person. Giver might be any person, receiver might be any person. Okay. Any person in the sense it can be individual, HUF, UOP, BOI, company, partnership firm, anyone, guys. First one. First A is money. Any sum of money is received without consideration and the aggregate value of which exceeds 50,000. The whole of the aggregate value of such sum shall be chargeable to tax under this head. So if the aggregate value of money is more than 50, entire money is taxable. That means if it is within 50, nothing is taxable. This is for money. Next, immobile property. Immobile property includes what, guys? Land, building, or both. For whom? For the purchase. If it is taken or received without consideration means what? Pure gift. Pure gift. Any immobile property received without consideration, the stamp duty value of which exceeds 50,000, then what will be taxable, guys? The stamp duty value will be taxable in the hands of receiver. Next, for inadequate consideration means your asset is purchased. It is purchased, but for a lesser value. Means we can tell it is like partly gift maybe. If the consideration is less than stamp duty value of the property, the difference between the stamp duty value and actual consideration, what do we call this as, guys? The difference between stamp duty value and actual consideration, what do we call it as? Inadequate consideration. If it is more than a year of two things. First one, 50,000. Second one, 10% of actual consideration. Actual consideration is purchase price. If you want, you can mention there in the bracket. Actual consideration here means purchase price, PP, purchase price or purchase consideration. The difference between the stamp duty value and the actual consideration, that is inadequate consideration, shall be chargeable to tax in the hands of the assessee as income from other sources. Hope you understood. This is in case of immobile property. Sir, here one key term is what? Stamp duty value. Stamp duty value on what day should we take? Guys, same like section 50C. We will take the stamp duty value on the date of what? Transfer. For the seller, if it is a transfer, for the buyer, it is a date of purchase. Sir, what if date of agreement and date of registration is different, sir? We need to take the stamp duty value on the date of agreement, provided at least a part of the consideration is paid by the buyer on or before the date of agreement in any mode other than cash. In any mode other than cash. Same provision was applicable under section 50C or 43CA, but that was from buyer point of view. Whereas same thing now is applicable from from purchaser point of view, guys. From buyer point of view. Okay, I have given it here, you can see. Where the date of agreement fixing the amount of consideration for the transfer of immobile property and the date of registration are not the same, the stamp duty value as on the date of agreement may be taken, provided the amount of consideration or a part thereof has been paid by any mode other than cash on or before the date of agreement for the transfer of such immobile property. I have mentioned in the bracket itself, same as section 50C and 43CA, guys. There also same provision is there, but there we will check it for seller. Now coming to the last type of asset. Last type of asset is what? Any doubt? Last type of asset is what? Movable property. But all movable property is not covered, so they are naming it as specified movable property, guys. So what is it? We will see. Any property other than immobile property. Any property other than immobile means what, guys? Movable. Okay. I have got it purely as gift. That is without consideration. Without consideration. Then what do we check, guys? FMB. Any property received without consideration, the aggregate fair market value of which exceeds 50,000. The whole of the aggregate fair market value of such property is chargeable to tax under the head income from other source. Sir, what if I have purchased movable property that is movable with consideration but which is inadequate? Which is inadequate. Then we need to apply this. For inadequate consideration, received for a consideration which is less than aggregate fair market value of the property, that is nothing but inadequate consideration, by an amount exceeding 50,000. The fair market value of such property as exceeds such consideration shall be chargeable to tax under the head other sources. So simple. First find out how much is the inadequate consideration. How do we calculate it? Fair market value minus actual purchase price. If that figure is more than 50,000, then that is tax. Then it is taxable, guys. Now, we saw three kinds of gift, right? All this three is applicable. Money anyway cannot be capital asset. I can tell immovable and movable property. This section 56 to 10 will be applicable only if it is a capital asset for the receiver or the buyer. You can see I have given the note. The provisions of section 56 to 10 would apply only to a property which is in the nature of capital asset, both movable and immovable of the recipient and not stock in trade. Means what they are telling is whatever you are receiving either as a gift, that is immovable property, whatever you are receiving as either as a gift or you are purchasing it for inadequate consideration, or even if it is a movable, whatever you are getting as a gift or you are purchasing for a inadequate consideration, it should be a capital asset for the receiver. Sir, what if it is a stock for the receiver? Guys, simple. If something is a stock for me, that means I am dealing with that in my business. So what is the business I am doing is I am buying some goods at a lower price and selling it at a higher price. Then you cannot come and tell there is a difference, there is inadequate consideration, pay tax on it. It won't be fair. Obviously, business itself is to buy at lower price, sell it at higher price. Correct? Now assume land and building is a stock for me. Now what do? I am a broker. I buy the assets, sell it at higher price. So when I bought, I would have done some negotiation. I would have used my smartness. I would have got it for a lesser price. Now can income tax department come and tell you have purchased for a lesser price? You that is taxable as income from other sources for you? No, no. So when I have purchased stock, even if it is for a lower price, 56 to 10 will not be applicable as. When is 56 to 10 applicable is only for a buyer or for the receiver if it is a capital asset. If it is a stock, not applicable. Okay, sir. Then I will mention here. Here, any property other than immovable property covers what? Specified movable property. What are those, sir? What are those? I have given here. Property means the following capital asset of the assessee, namely immovable property being a land or building or both. Okay, we have a separate provisions for it. Remaining are called what, guys? Specified movable property. Remaining are called as what? Specified movable property. What are those? One by one. Shares and securities, jewelry, archaeological collection, drawings, paintings, sculptures, any work of art or bullion. Sir, if any of these are received as a gift or if it is purchased for inadequate consideration, is section 56 to 10 applicable? Yes, it is applicable. Sir, what if it is any other movable property? For example, I have received car as a gift, bike as a gift. It is movable, but is it covered in this list? No. That means 56 to 10 is not applicable. That means 56 to 10 is not applicable. Hope you understood. So here movable property covers only from 2 to 7. If it is any other movable property, guys, if it is any other movable property, then even if it is received as a gift, it is not taxed. It is not taxable. The best example is like car, bike, and all. Okay, fine. Coming back. Coming back. The following are the exceptions, guys. So we saw what are the gifts which are taxable, but in the following case, it is not taxable. In the following case, it is not taxable means even if the value is more than 50,000, still not taxable. Which are those cases, sir? Provided further that this clause shall not apply to any sum of money or any property received from relative. Sir, relative, giving gift, no chance, sir. They are there only to give tension, sir. Can that be considered as gift? No, no. Stages. Gift can be either in the form of money, movable property, immovable property. Clear up. But if by chance, if you receive gift from your relative, assuming they gave, okay, now obviously they would have given some with some big expectation. Assume they have given. Sir, is it taxable? No. Now who is relative? Sir, I have a very big list, sir. My relative, my mother side this big list, father side this big list. Clear? Yes. So let us see who is relative for income tax purpose. That is for section 56 to 10. Madam, now don't worry about your relative. Just now she is telling a list for her. Relative for section 56 to 10 means who? Who and all are included. Relative means in case of an individual. Okay, for individual, who is the relative? Spouse of the individual. That means for husband, wife, for wife, husband. Spouse, you know, na the name of it. Obviously. Chalo. Brother or sister of the individual. Brother or sister means oh no. Sir, I call my friend brother, bro. Brother from another mother. Correct? Girls also. Sir, sister, my sis, my soulmate. Yo. So many names are there which I cannot tell. Sir, sister from another mother. Are they relative? Yashaswini? Are they relative? No. For income tax purpose? No. Understood? Friends are not covered here. Sir, friends are more important than relative. Okay for you. But here, relative includes only blood relative. Blood relative. So, brother and sister also one, not cousin and all. Chalo. Brother or sister of the spouse of the individual, or else spouse will do galata, you know. Correct. If you treat only your brother sister as your brother sister, problem after marriage. You have to treat their brother sister also as your brother sister, their parents also as your parents. So everything is taken. And you will understand after marriage everything is implied. Brother or sister of the spouse of the individual. Brother or sister of either of the parents of the individual. Chikkamma, Dodamma, Atte, whomever you call, Dodappa and all. Next. Any lineal ascendant or descendant of the individual. Lineal ascendant means the seniors. Descendant means junior. Means next generation. Clear? Yes. Any linear ascendant or descendant of the spouse of the individual. Okay. Next. Spouse of the person referred to in items 2 to 6 means for all these people, even spouses are covered. They, along with them, their life partner also. Clear? Yes. Hope you understood. Just remember the list roughly, guys. You can also connect your relative. Okay, whoever will come under whatever points. Now don't connect. After the class, you can connect. Then in case of HF, any member of HF. Any member of HF. Okay. If you receive gift, what occurs? Nenigidilla. For all of you, this is not there, except madam. Don't worry, don't connect. Don't tally. Okay. ಆಯ್ತು ಪುಷ್ಪ ಚಲೋ hope you understood. Leave it. Next, for HUF, any member of HUF is a members, means they are relative. They are relative. Okay. Next, on the occasion of marriage, if you receive any gift, exam. Because plan man, if you receive any gift from anyone, not only from relative. See, if you receive gift from relative, anytime exam. Anytime. But if you receive the gift on the occasion of marriage from anyone includes anyone under the sky except employer. Sir, why did you accept employer? Because the employer, if you give gift, where is it taxable? Salary. 56 to 10 is not applicable. In a salary, they didn't give any exceptions like this. If employer give you gift on the occasion of anything, check is it in money? Fully taxable. If it is in kind, check the value. Less than 5, more than 5. More than 5, fully taxable. Correct? Your employer came to your marriage and gifted the watch worth 10,000, fully taxable. Ask them, sir, send it to someone else. Send it through someone else. Actually, if employer doesn't give, assume it is received from others. Exempt under section 56 to 10. 56 to 10, exempt. Pure tax planning. Correct? Yes. Now, obviously, if the employer comes, make one person stand in front of, okay, that all. Tell, please go. Don't allow your employer into the marriage hall. Okay. Sure. On the occasion of marriage, it is exempt. Okay, na Girish? Girish got it? Now, which marriage? Which marriage and rain? Is it only on the first marriage or any marriage? Point to be noted. Correct, no, Sanya? But you people go only for one. If not, leave it. Don't get married. Why waste of time? Focus on other things. You plan whatever you want. You please lead your own life. Now, listen. Okay, let us stick to provisions. All these are connected to provision. That is why I am explaining. If not, I don't like to take all these points now. If because you guys will now start getting connected. The calculations will start from now only. Listen. On any marriage exam, yes, they didn't put any condition. Did they use the word first marriage? Hello, did they use the word first marriage? No, any marriage. Any in the sense first marriage, second marriage, third marriage, fourth marriage. Beda. You cannot take so much risk in life. You already taken risk. What is that? By taking this course. Okay. Now there is something called as professional skepticism. Auditing. Who have studied auditing will be knowing professional skepticism. What is it? Auditors should have that attitude. What is that attitude? Don't accept anything without questioning. Without questioning means whenever you go to the client place, you have to question the client. Obviously, client will tell, sir, everything is prepared properly, sir. Books of accounts perfect, sir. Just sign and go, sir. Is that your job? No. You will call out for all the details, evidence, ask for the data. You check each and everything. Then accordingly, you give the audit report. So in your professional life, please maintain this. What is it? Professional skepticism. But in personal life, never. When you go home, okay, especially boys, when you go home, accept everything without questioning. Accept everything without questioning. Clear? See, simple. I have been married for almost 4+ years. I have been married for 4+ years. Till now, not even one single fight in our house. Why, sir? Simple. I follow one simple agenda. She go in her way. I go in her way. Simple. Correct? That's all. Whether they tell right or wrong. Yes, correct. Yes, correct. When they are in good mood, they will call you in different names, sweet names. When they are in, when they are, when they are not in good mood, obviously things may not be right. Accept it. That's all. Coming back. Follow this after marriage strictly. One more thing. I want to share this. So my wife is a strong believer in God. So she always wants to visit temples, some good temples. So she wanted to visit Kashi, Varanasi. So she was telling, please let us plan for it. I told, okay, you can plan. But there is one key point which we have to note. When we go there, we need to leave something which we like the most. Correct? I told this for my wife. So she told, so what you leave on? I told, I love the view most. So she told, okay, plan change. So it was planned for other place. Sure. I get back. Under a will. One more thing. Sir, what if the gift is received on the occasion of marriage anniversary? Sensible, right? Sir, it can happen, no? What if gift is received on the occasion of marriage anniversary? Marriage can be celebrated only once in life. Adu marriage day. Marriage anniversary is not exempt. Marriage anniversary, if you receive any gift, not exempt. Okay, and look at one thing. See here, actually, I don't know whether intentionally they have missed out or what. Hey, they didn't mention any condition here. Whereas for children, everywhere maximum 2. Correct? In salary chapter 1, especially you would have seen maximum 2. Even if you have more than 2, exemption is for 2 only. But here there is no exemption. Sorry, here there is no condition. Okay, coming back. under a will or by way of inheritance. Means if you receive any gift by way of will from your forefathers or ancestors, nothing is taxable by will or by way of inheritance. Next, in contemplation of death of the payer or donor, as the case may be. Okay. Means I had given a property for you. I had told if I die, property has to go to you. So in that case, sir, in case of death of the donor, if property passes on to the receiver, will section 56 to 10 be applicable? No. 56 to 10 will not be applicable. Then from any local authority, means if I have received any gift from a local authority as defined in section 1020. 1020 defines local authority. If the giver is the local authority, if the receiver is anyone, it is not applicable. Next, from or by any fund or foundation or university or other educational institution or hospital or other medical institution or any trust or institution referred to in section 1023C. Guys, whether the following people are the receiver or giver, from or by they have told. If the following people are either the giver or the receiver, 56 to 10 is not applicable. Next, from or by any trust or institution registered under section 12A, that is charitable trust. So if they are receiving it or giving it, 56 to 10 is not applicable. Okay. Then by way of transaction not regarded as transfer under certain clauses of section 47. Guys, under section 47, we have seen the list of transaction which is not a transfer. For the transfer, sir, what about for the receiver? Is section 56 to 10 applicable? For example, we saw amalgamation, demerger and all. Amalgamation, Maruti Motors, Suzuki got amalgamated and named it as Maruti Suzuki. Now, we saw from the transferor point of view, it is not a transfer. Sir, for the receiver, is 56 to 10 applicable? No. For receiver is an Indian company, you remember. Is 56 to 10 applicable for the receiver? No. Same way, demerger, resulting company, JFS, Geo Financial Services, received some assets from whom? Reliance Industries. Is 56 to 10 applicable for them? No, guys. Hope you understood. Section 47, we learned from the transferor point of view. Same way, for the receiver, whatever capital assets they have received. Sir, is section 56 to 10 applicable? No. 56 to 10 is not applicable. Okay. Next, I. From an individual giver by a trust recipient created or established solely for the benefit of relative of the individual. Now, if I have transferred my properties to a trust, trust is the receiver. Is section 56 to 10 applicable for them? No. Next, COVID related. COVID-19. So it got extended even after 19, but name is COVID-19. Yes. That is 2019. COVID-19, guys, assume assessee was tested positive because of COVID-19. Later, they took lot of names, new names and all come. I don't know how they give all that names. Okay. For all that new version, they gave new name. Yes. COVID-19 includes everything part of it. Yeah. If assessee was tested positive for COVID-19 and if any expenses was incurred for the medical treatment of the assessee by others, sir, is it taxable in the hands of the person who got tested positive? That is the assessee? No. No, it is not taxable. Means medical treatment expenses relating to COVID-19 is not taxable. Okay. Sir, what if by chance assessee was tested positive due to COVID and he died? The family members received the compensation either from government or charitable trust or even employer sometimes might pay it. If family members receives the compensation for the death of a family member that is due to COVID-19, then it is not taxable. Then it is not taxable. Sir, what is the amount limit? If it is received by employer, guys, fully exempt. But if it is received from others like government, charitable trust or any agency or any trust, then if it is within 10 lakh, not tax. Not taxable. Let me read that. J. Any sum of money received by an individual from any person in respect of any expenditure actually incurred by him on his medical treatment or treatment of any member of his family or for any illness related to COVID-19 would not be chargeable to tax subject to the conditions notified by the central government. Okay, now so simple. If assessee or any of his family members are tested positive for COVID-19 and if they are admitted in an hospital for which there is a medical expenses incurred, assessee didn't incur it, someone else incurred it, maybe government. Normally, government was taking care of it or any trust. Yeah. In that case, obviously, it is like I got some free benefit. Is it taxable in the hands of assessee? No. Next, this is for the medical treatment. Means the person who got tested positive for COVID-19 is alive. For medical treatment, some amount was spent by someone else. Exempt. Next, what if he has died, sir? Any sum of money received by a member of family of a deceased person means the person who was tested positive is gone forever. In that case, sir, the family members might be receiving some compensation. If that family member is receiving the compensation from the employer of deceased person, it is exempt fully without any limit. Without any limit, it is exempt. Whether 5 lakh, 10 lakh, 50 lakh, 100, whatever it is, 1 crore, 2 crore, whatever is the amount, fully exempt. Sir, what if it is received from any other person? From any other person or persons to the extent that such sum or aggregate of such sums is less than or equal to 10 lakhs. Sir, what if it is more than 10 lakhs? Fully taxable. Okay. Would not be chargeable to tax where the cause of death of such person is illness related to COVID-19 and the payment is received within 12 months from the date of death of such person and subject to such other conditions notified by the central government. Means all the proof has to be submitted, guys. All the proof has to be submitted that the person who died is due to COVID-19, he was tested positive. All that medical certificate also has to be submitted. Got it? So simple. Listen, two things are covered here: medical expenses for the treatment or compensation. If it is the medical expenses, whoever is bearing it, for assessee it is exempt. If it is the compensation, under the two things, who gave it? Was it an employer? If yes, fully exempt. But the employee is no more, he has died. Who is receiving it is family members. So employer of the deceased person is giving the compensation to their family members. Fully exempt without any limit. Sir, what if it is given by others? Others means normally it was given by government due to the death. Initially, they used to give when the numbers of death got increased, government also told, please take care of yourself. Clear? Yes. So, actually, how was it? Okay, if you just recall that situation, that time, Abba, it's like our generation came through all this, overcame all this situation. We have won one battle. It is like just like a war. Okay, we have gone through because many people lost their life during that situation. Unfortunate, very unfortunate. Now, if compensation is received from any other person other than employer, if the amount of compensation is up to 10 lakh, exempt. If it is more than 10 lakh, fully taxable, guys. Okay. So everything related to gift we have covered till now. Gift is very important provision, guys. Under the head other sources, this is one of the most important thing. Yeah, fine. Now coming to the charts. I have already explained all the things. Now you can start taking down. But listen. First, I will just tell full forms because I know some of you may get doubt later. AO, AVOM stands for what? Aggregate value of money. And here IC stands for what? Inadequate consideration. FMV stands for what? Fair market value. PC or PP stands for purchase price or purchase consideration. Okay. That's all. All the things will repeat here also. Yes, all this you can just make a note of it one by one. Here I have just covered money and specified movable property. This is an example. You can just mention, refer example below for this. Then the last chart is with respect to connecting the provisions from seller point of view and buyer point of view.